Hi everybody, Dale Pinkert here. Let's have a great week. Thought I'd start off the week with my telescope looking at some weekly charts going into this week, and as the week progresses, fine tune important price supports, rejections, confluence as the week progresses. We do have the Fed this week. That's the big news. Market probably hoping that they'll cut. Perhaps the market's setting itself up for some disappointment. Retail sales were pretty good, and I think if it's going to, when it happens, has a better chance in July. Anyway, looking at the dollar, if you notice the blue moving average from this is a daily chart. It is a daily chart that I'm working with. So the daily chart, we held the 200-day right there, and a very positive day Friday after getting back inside of this wedge line that we had another false breakdown. You have to go with a major trend until it really changes. I know one thing for sure, dollar back under this moving average 96 and a half, that the dollar has peaked. Until that time, I think there's a potential that we're going to continue to have a blow off. We had a false breakout in euro a week ago last Friday, negated it. I talked about we could not start trading back under 1280. That would be a warning sign that the breakout was turning into a failure, and then we broke very hard down to around the 112 level. So dollar looks like we're going to make a run at the highs. 98.80, 99.20 have been a lot of Elliott wave targets, harmonic targets. So we'll see if we could get that blow off here going into the July timeframe. I want to take a look at NASDAQ on the weekly. Again, no. Daily again, Dale. Dale. Daily should be easy. Okay, so it's Sunday afternoon in Southern California. So you know what that's like, right? Sunday afternoon, about 6 in the evening, kind of June gloom here on the beach. But I think there's going to be some short-term gloom in NASDAQ too. As you could see, the daily's fighting with this 50-day. I'm not looking for these lows to be taken out. In fact, I think we could have a break and then a blow off to new highs with the S&Ps. But if you look to the left, there was a low that came in on May 14th around 74.12. Excuse me, the low that day was 72.75. So we're talking about a couple of hundred points to the downside, maybe on some disappointment that the Fed is not going to move right away, and that the market has already discounted a few discount rate cuts or easing by the Fed. Their market seems to be wanting QE infinity here, and I don't know why. I mean, you look at the Nasdaq, we're not that far away from all-time highs, so interesting. I think we're set up for a little bit of a short-term failure here in NASDAQ. And I want to wrap it with gold. Gold was a great performer last week in the face of a strong dollar. And I think that we're going to head towards that 1380 breakout level on the weekly, actually break it out. You can see here on the daily, we have a couple of drives here, but to me, it doesn't look like a peak. And I would like to see where momentum is at new highs because, as you could see, if you look at the high on June 7th, although we're diverging right now, that reading was extremely high in the 80s. Markets generally don't peak, and it takes a little bit more distribution for that to take place. Everyone have a great week trading. This is Dale Pinkert. You can find me on Twitter at Forex Stop Hunter. And remember, don't just count your pips, count your blessings. And I know where your stops are.